Good morning, everyone. This is Doug Campbell with Right Way Options and your morning market preparation video for August 24th, 2017. Well. We had quite a battle going on yesterday. It looked like yesterday morning we had the Bears really trying to take over with that gap down. But the Bulls had something to say about that, and they fought back with about, equal energy. And we ended up the day here on the diamonds. The Bulls took the upper hand, or Bears took the upper hand, at the close. But really, all in all, we were locked in a deadlock battle here at resistance. This morning, we're seeing the futures trying to pop up. We've got a little bit of a push in the pre-market futures, and they're coming up as the morning is going on. And so we're pushing back up toward that high of yesterday, kind of back up here toward that resistance level. But let's keep very focused on the fact that that resistance level right there and that downtrend is going to be the challenge point, the place where the Bulls or Bears are going to take over. Now let's also keep in mind that just because we have these levels here doesn't mean necessarily that if we breach through here that all is well, that we can just get wildly bullish. Because remember, we have additional issues here that we have to deal with, a downtrend, additional resistance levels. So we could win this battle right here on the bull side, but it may not be over. So caution needs to be exercised here. So be careful as the pre-market folks. Remember, the big guys are the ones pushing that. They are creating that professional gap. And remember, what's a better way to unload your position if you want to sell is pump it up in the morning, get people to react emotionally and buy, and as soon as the market opens, they have somebody to sell to. I'm not suggesting that's is happening, but that could be the case. So we don't want to chase into a morning gap. We want to watch and wait. We want to make sure actual buyers show up after the open, that there really is some follow-through buying before we jump into the fray. If we take a look, and this chart right here, this is an indicator if you've never seen it before. It's a proprietary indicator of TC2000, which is a software that I use. This indicator right here is balance of power, and that balance of power is suggesting distribution is going on. Notice that we are getting selling. This is large lot selling as we rally. So just be careful. Anything is possible here. I don't want to suggest that we're going to go down. Overall, I've got to say the Bulls still have the upper hand in the market, but there are some questions. There are some, that armor is just not as shiny as it once was overall. So let's take a look at the SPY. And here's where one of the bigger problems that the market has is this big index really has, broken its back or broken the downtrend. The uptrend. There's that uptrend, and here's the downtrend currently in play. And any rally back still up into this resistance level. See, the diamonds, they're really pushing the diamonds. There's only 30 companies in the diamonds, and they're really trying to lift the entire market by pumping the diamonds. And we're not seeing that same kind of energy or follow through in the SPY. If we look at the SPY, you can see this is where it's expected to open, not even above yesterday's high. So while they're pumping the diamonds, trying to create a whole bunch of energy this morning, get everybody inspired to buy, we're not seeing that kind of an inspiration in the diamonds. We're not seeing that kind of inspiration in the SPY. So be careful, be watchful. We want to make sure we see that follow through buying going on, okay? So keep in mind, we have these resistance levels through here that we have to deal with in price. And these resistance levels, we got a lot of work to do here in the SPY. This is not going to resolve itself probably in 1 or 2 days. It's going to take some time as that resistance continues to work here on the market. Let's take a look at the Qs. Now the Qs have been in a much better situation, holding their uptrend, holding the 50-day moving average, or recovering, I should say, the 50-day moving average, and looking much stronger. But here again, notice that we're expected to open right about here. So, you know, if you draw that over, we are not seeing the pump that's being done in the Dow futures is not showing up in the NASDAQ. So we've got one futures indicator trying to pump the whole market. So be careful, don't chase in. Watch this closely. Wait after the market opens. If we give it 20 to 30 minutes, we'll be able to find out whether or not there's actual buyers stepping in, and we can go in and follow along with the real buyers. We don't want to get caught in the pump. Okay? There's an old phrase out there, it's called the pump and dump. And if it would occur, let's go back here to the diamonds chart. If it were to occur, whoops, it could easily, we could see that gap up morning. They pump it up, they get as many people as they can excited about buying, and then they sell it off. Now, I'm not suggesting that's going to happen, but it's a common pattern when we get up around price tops, these pump and dumps, these pushes. That's what this move was here. Pump it up, sell it off. Pump it up, sell it off. And we see that very commonly around price highs. Here was a big gap. This one gapped up and sold off. Push it up, not able to hold those highs. And you can see it all through the charts. When we get around highs, that's a very common pattern that you have to watch for. Don't in any way, shape, or form think I am talking bearish about the market, because I'm really not, because I don't know which way it's going to go. I'm just suggesting caution levels where you need to protect yourself just in case it happens. I would rather follow the market than rather dive into a sword, dive on the sword, trying to predict. I can just wait. I'm a little trader compared to the overall market. I'm a little fish in a great big pond. I don't have to try to fight the battle. What I need to do is recognize when the edge has been given to one side or the other, and then follow along. Let's take a quick look here at IWM. That poor IWM just hasn't been good at all. Not looking healthy. And I'm going to adjust my line here a little bit, straighten it up a little bit closer to current price. Right in here. There's that downtrend that we've got going here in IWM. IWM clearly below lots of levels of support. If we take a look at the moving averages on IWM, you'll see that we are clearly below the 200-day moving average still. So even with this rally back, we're not getting anything going, and we're just not in a happy place. And we're going to have to wait and see a lot more evidence here of breakthrough before I'm going to be too inspired here with this market. So it looks like we're going to bounce up here and test this resistance level again at the open. We'll have to see if that resistance holds. And please understand, we can pass through that downtrend. We can easily pass through that downtrend on a pop-up like that and then still sell off. And we've seen plenty of evidence of that. Here's that gap up and sell off. Here's that move up and sell off. So we can do that at any time. So anytime we pass up through there and we have all these resistance levels above, doesn't mean it's time to buy with both hands. It's time to watch carefully, okay? Now let's take a quick look at the VIX. the VIX has pulled back into what I call this danger zone. It's that area where I see complacency in the market when we get down in here. You know, everyone kind of gets the idea that the market just can't fall, and so they get complacent with their trading. And we did pick up just a little bit yesterday here. Nothing major. Maybe a little bit of an attempt to hold this support level. That will certainly be erased completely this morning, probably, if we do gap up and run. So watch this. Again, I'm not going to be overly concerned with the VIX unless we break above this downtrend line and we somehow hold it as support. If we break above there, pull back and hold it as support and show fear creeping in at that point, that's where I'm going to get worried about the overall market. And I will get particularly worried if we cross above this resistance level and hold above that resistance level. Then we're probably in trouble. Until that occurs, I'm not overly concerned, but certainly reason to watch, because these very quick spikes, look how fast they come. So watch out for that. So everyone, hey, I hope those bulls actually do win the day, but I'm going to be very watchful and careful on that. I hope everyone listening to the sound of my voice here has a great day and great profits. I do hope that is the case. And if this is the first time you're seeing my videos, I turn this information out every single day. It's part of my market preparation, and I just happen to share it. If there's anyone out there that hasn't seen it before and would like to receive this information every day when I put it out, please do me a favor and click that subscribe button on Facebook, or excuse me, on YouTube, and the follow me button on Facebook, so that you'll get notified when I put this information out every day. Also, if you could do me a favor and click those like buttons, those thumbs up buttons, I do appreciate that. And feel free to share a comment. I'd like to hear from you if you're seeing that these videos are helpful, or if there's even something that you would like to see me add to them. I'd be happy to consider that as well. Everyone, take care. Have a great day. Great profits, and I'll talk to you all soon.